Bang, bang. What's up, guys? Lunch
Lunch money
money
time.
time. Ooh, that was good. Well, while she's trying to get rich, the rest of us just trying to get our lunch money right. I'm here with the beautiful and intelligent Polina Ivailova Marinova Pompliano,
That's me.
Pimp. What's up?
What's up?
Get money, get paid. By the way, don't forget that lunch money is now sponsored by BlockFi. If you go and you open a BlockFi account, you put some money in, you then can earn interest on that money. That money will earn up to 8.6% APY. That means that if you put $100 in and you leave it there all year, you'll earn 8.6%. If you put more money, you still earn 8.6%. It's amazing. Go and check it out. BlockFi.com/pomp
Or lunch money.
or lunch money. It
Okay.
goes to the same place. BlockFi.com/pomp. Go check it
Or
out. You
lunch
can
money.
also buy and sell crypto,
I'm
and you
still
can take a
very
US
offended.
dollar loan against your crypto collateral.
I'm still very offended. If you type in Paulina, does it go there? I don't think so.
No, BlockFi.com/pomp.
All right.
I'm an investor. I sit on the board. It's awesome. I use it. Go do it. What's up with our topics?
U.S. debt has reached its highest level compared to the size of the economy since World War II and is projected to exceed it next year, the result of a giant fiscal response to the COVID pandemic. I feel like we're setting all these records we don't want to be setting.
There are three other countries that are notorious for having more debt than their economy: Japan, Italy, and Greece.
Ugh.
Not exactly the company that you want to keep when it comes to this specific statistic. On top of that, the idea of this year, the debt to ratio is going to be 98%,
The
give or
debt to
take.
what?
And in that situation, that would also be the highest since World War II. So
But it's different, right? This
why
time
is it
around?
different?
Well, because the surge in borrowing so far isn't creating angst amongst investors or hampering the U.S. ability to borrow more. Investors have gobbled up U.S. Treasury assets drawn to their relative safety. Moreover, interest rates are expected to remain low, suggesting the government still has plenty of room to borrow.
Maybe.
Not looking good.
Maybe. Look, the short answer is this time is not different in terms of it's still not great situation, but it is different in the sense of there are not very many people who have lived through a global pandemic where we've all been forced to sit at home because of a government mandated lockdown and then had a government step in with historic quantitative easing and interest rate manipulation that then led to a rocket ship in public equities. So all of those factors combined create a situation that we just haven't seen before. That's fine. But that doesn't necessarily mean that the core components of economics, of financial markets, of asset valuations changes. It just means that you've got to navigate the markets given the current environment. And we'll see who's right and who's wrong.
Navigate those markets.
Well, that's why they make markets, is because people are literally betting money on one or something else happening. And the market is ultimately the referee. The market will determine who's right and who's wrong. Right?
Yep.
All right, what's up?
All right. So, Bill Ackman.
SPAC.
Bill,
Every time we talk about SPACs, SPAC.
Affleck.
Go ahead.
Okay. Bill Ackman approached Airbnb about a merger with his blank check company, but the home rental site rebuffed the billionaire investor and said it prefers a traditional IPO. I thought Airbnb was going to do a direct listing.
That's why
is
they
that a
rebuff.
traditional IPO?
No, that's why they rebuff. So there's three ways you can go public for those that don't know.
But
You can go through a traditional IPO process, right, which basically means you sell shares into the market while you go public, and you can raise capital that way. Another way that you can do it is a direct listing. Up until last week, you could basically just go and say, hey, start trading my shares, but I'm not raising any money.
I thought that's what Airbnb was going to do.
That is what they're going to do.
They said they prefer a traditional IPO.
No. They said that they...
yeah. What?
This article may not be accurate,
Okay,
but in other articles they talked about a direct listing because that's what they told employees that they were going to do was a direct listing. So maybe now they're changing their mind, but for sure they told employees that they were going to do a direct listing.
Okay.
Then the last step is through a SPAC. Basically, what happens
SPAC.
is there is an entity that is publicly listed. That entity then can acquire a private company and essentially bring that company now into the public markets just through acquisition. Bill Ackman, who is a famous hedge fund manager, one of the best investors in the world.
Pershing Square.
he raised a $4 billion SPAC earlier this year. So the way that a SPAC works is that $4 billion normally is going to buy somewhere between, it's going to buy a minority position in most cases. So less than 50% of a business, meaning that he's got to go find companies that are worth at least $8 billion or more. In many cases, it's around 20% is what you're buying of the business. So in that case, Bill Ackman would essentially have to go find something that's worth somewhere between 16 to $20 billion in the private market. There's just not that many companies that big.
And I have a question. So as a public market investor, when I see a SPAC like that, I buy with the idea that he's going to make a purchase of a company that I like. Well, I'm just kind of betting on him.
There's a lot of complexity. I don't want to get into all the details right now because it gets pretty in the weeds. But basically, there is investors who commit capital up front. So the $4 billion, Bill Ackman doesn't actually have the $4 billion at first. He goes and he finds a deal, and then he brings it to them and says, hey, I've negotiated this deal. Here's what it looks like. Here's how it works. Basically, will you guys approve it? Right? And those investors can choose to.
But is this done in the private market?
It's not done on the public market in terms of the stock price, right? So what's happening is he goes to those investors and he says, here's the deal, here's all the terms, like, give me your money if you approve it, right? And then they give him the money and he does the deal.
I see.
They can say, no, we don't like this deal and remove it. When you're dealing with people like a Bill Ackman, when you're dealing with billions of dollars like this, he's not going to propose the deal unless he knows that he's going to have the votes to get the approval. But there's also a public stock price as well.
Yeah, that's
that public stock price is basically people speculating on what's going to happen and what's he going to buy.
But they're betting on him buying something good.
Well, so I don't think that his SPAC is actually publicly trading it. There's all kinds of complexities around the timing, whatever. But long story short is Bill Ackman's SPAC, if he was to buy a company like Airbnb, would eventually become the Airbnb stock.
Important to know, SPACs have a limited amount of time. I forget, is it 18 months or something? To make a purchase. So they have to. Usually about 2 years. They don't identify a target until after shares begin trading. Yeah,
so you can't, basically he can't say, oh, I'm buying this company and now the shares trade and then go do the deal. There's a lot of regulation around this. So look, he's got $4 billion. He's got to go buy a company that, minimum I'd say is $10 billion or more. I mean, look, he could do it, but I just don't see that happening. I think that he's very interested in going after U.S.-based technology companies that are private right now that want to be in the public market.
Do we know why Airbnb would rebuff his offer?
Because they don't want to do a SPAC, right? So one of the complexities of doing a SPAC is there's all kinds of things around warrant coverage and stuff. So basically, Bill Ackman actually did a pretty good job from what I remember. The way he structured it was very kind of fair. But there's a lot of SPACs that are set up in a way where basically the people who manage the SPAC, they end up actually owning more of the company, getting a great deal. They can multiply their money very quickly. And it's an okay deal for the company or to a good deal, but it's a great deal for the SPAC sponsor. And so there's a lot of companies that are just saying, I don't want to go do that. And so they're going to go do either direct listing or traditional IPO.
Got it. Cool.
Makes sense?
Yep. Robinhood.
That's your SPAC class for the day.
Popular trading platform Robinhood is under investigation related to its disclosures around its practice of selling clients' orders to high-frequency traders. I think I know about 2 words of that sentence. So what are they doing?
What essentially happens is when you're on Robinhood and you go and you make a trade. So let's say you want to buy 100 shares of something. The best way to think about this is those 100 shares are then put on an exchange to sell. Right. But what happens is with Robinhood, rather than Robinhood paying for the ability to put a trade on the exchange actually pays Robinhood. They say, hey, you could go to all these exchanges, but come to ours, right? Come to this marketplace and we'll pay you for that order flow, right? The orders that you're putting in. Now, the reason why they're doing that is because the marketplace or the exchange turns around and they sell those 100 shares, the information about the 100 shares to a high frequency trader. So in a very, very simple overgeneralized example, let's say that let's just pick a stock. Let's say Tesla stock is trading and the bid and the ask, basically the amount of dollars that somebody wants for the shares versus the amount of dollars somebody is willing to pay for the shares, has a spread of $1. So somebody wants to sell shares at $100 and somebody's willing to buy the shares at $99. So that spread is there. What will happen is the high frequency traders know, okay, you're about to sell 100 shares. They'll go in and they will buy 100 shares at 99 or at $99, and then they will turn around and they will sell it to you at 100, right? Or I'm sorry, I got it backwards. Basically,
100.
what they'll do is they'll capture the spread because they know you're about
spread
to sell.
Equals difference.
The difference, yes. So they know you're about to sell, so they're able to basically what they call front run you. So they go and they make a trade before your order gets executed, and they can make money. But they're only scalping like literally 0.1%, 1%. They just do this hundreds of thousands of times and end up making a lot of money.
So basically, the SEC's probe into Robinhood is at an advanced stage and could result in a fine of more than $10 million if the company agrees to settle, according to the Wall Street Journal. Selling order flow is not illegal in itself, and most brokerages do it. However, more of Robinhood's overall revenue comes from the practice than other brokers. So
Robinhood's whole innovation was we're going to do zero cost, like zero commission trading, which was unheard of at the time. You used to have to pay every time you traded.
And then everybody followed suit, right? TD Ameritrade, all of the...
Yes. And so the big thing that happens here is they're not getting in trouble for doing this because, again, it's legal. You can do it. It's just there's a lot of questions around, are they actually disclosing it to the individual traders? Mm-hmm. And the reason why this is maybe not ideal for traders is, yes, you don't pay a fee in order to trade. But what happens is somebody's front running you. And when they front run you, you don't get best execution of pricing. So that means that you actually could be buying something at a higher price than you would have otherwise. And therefore you're quote unquote losing, or you're paying for somebody to front run you. Yeah. Right. And so it's just a different way for the company to make money. They're getting in trouble because people feel like they haven't actually disclosed this appropriately. We'll see what happens.
Guys, because I stay true to my word, look at what I did today. Oh wait, whoop. This way. Instant Pot.
Whoop.
Instant Pot. He was covering it, but I got you. I brought the crock pot out for you.
Okay. Is it a crock pot or
it's an Instant Pot?
Is that the same thing?
No.
Okay. All right. What's up with Bumble?
Okay. Tell them about the meal I made last night. Really great.
Facts.
Made stuffed peppers.
Facts.
Okay. Bumble, the dating app, is preparing for an IPO that could seek a valuation of $6 to $8 billion. And it could come early next year. And Bumble reportedly has 100 million users worldwide. It's a lot of people.
Yeah, it's a lot of people. I mean, this whole story from the beginning has been really weird. So for people that don't know, Bumble was started by...
Yeah. There's a lot. Whitney Herd Wolf.
One of the three founders of Tinder. There was a big falling out. She went off. She started Bumble, but she didn't start it by herself. She started it in concert with this guy.
This Russian businessman.
Who owned a bunch of other dating apps that were really successful. And then eventually they acquired the app. I forget all the stories, but basically, long story short, Bumble's been very successful, right? They claim to have 100 million users, and they're looking for a $6 to $8 billion valuation. I mean, makes sense.
Yeah, I read this in Morning Brew, so I'll give them credit, but I thought this was really good. So basically they were like, you know how back in the day it used to be taboo to meet on dating apps, and people would lie about we met at a bar, like it wasn't a dating app? But now in COVID times, it's taboo to say you met somebody at a bar. Instead, it's safer to meet on a dating app.
I would be dangerous on dating apps. I would just hit people with sup.
That's not dangerous. That's literally every dude on every dating app.
Oh, is that what they say?
Pretty much. Not to me.
Oh, that's fine. Well, let me know if anyone messages you on the dating apps.
I'll let you know. Okay. Okay.
Got real quiet and real fast.
So Amazon is opening. Amazon is opening a new Whole Foods store in Brooklyn, but it won't open to the public. They're being called ghost grocery stores. The Whole Foods store will be permanently online only, charged with fulfilling online grocery orders for customers in the Brooklyn area. The store, which opens on Tuesday, blah, blah, blah. Grocery delivery continues to be one of the fastest growing businesses at Amazon. We're thrilled to increase access to grocery delivery. It's never been more important.
I love this idea.
The ghost grocery.
Just again, when you go to online first business, where you now take the space, if you think of a grocery store, how much room in like square footage wise is reserved for the cashiers, is reserved for the walking space, so customers feel good, is reserved for like cap end space. So you have these big displays, all this kind of stuff. The second you remove the need for the person to go into the grocery store, you completely reimagine how the grocery store is set up, and
Okay,
you can set it up for efficiency. And now it's
but
a warehouse. That's all it is. It's just a warehouse.
I understand, but I think that a lot of people, when they go to the grocery store, a lot of those displays, a lot of those things help you discover new items and new products and things like that. If
Do
you
you
make it
think that
all,
you can discover more things by walking around the grocery store or online them suggesting everything to you?
yeah,
And they're likely to actually get to know you better. Like right now,
like targeted ads.
well, the way that I think of, no, well, just think of like a recommendation. So, like the way I think about the grocery store is they create a one size fits all display,
That's
right?
true.
So when you walk in, I walk in, and everybody else walks in, we all see the same display, right? And the way that the grocery store is set up, and there's a bunch of engineering
Yeah,
and data science that goes into, seeing certain colors that make you hungry and all this kind of stuff. That's all fine, but it's one size fits all. What the internet allows them to do is dynamically change. So when you go
I
to those sites,
understand that.
you see something different than I
Okay,
see, and it's more personalized to me. It's actually a better experience.
I understand. And this is a little bit out of the grocery store realm, but like I'm just reminded of the story of Sarah Blakely building Spanx and like moving her display around to be in different whatever because it was a new product and nobody knew about it. Fair. Like if I'm online, they can target me. I can find out about Spanx or whatever. What if you just are never targeted for items for women, so therefore you never know what to buy me for a gift? Not that you should buy me Spanx. I'm just saying in general, like because it's hyper personalized to you, you end up not discovering new things that maybe you
Yeah, but
would
again,
like.
you're not going to the grocery store to buy your wife a
I
gift.
know, but
So what ends up happening is they can suggest other
chips,
types of food that
like
you may like,
okay, like a
right?
chips thing that you might like, but
But
you don't know because you've never searched chips.
you sound like a boomer. The internet is better. It's better in every single way. The only way that it's not better is the social experience of going to the grocery store.
I
If you
don't
like
love
want
the
to get out and
social
walk around,
experience.
that's fine. But from an efficiency standpoint, from a business standpoint, this is way better.
Yeah.
I'm gonna start ordering groceries online. All right, what's next?
Hey, okay, you know how Prince Harry and Meghan Markle left the royal house?
We out.
The
See ya.
royals? Okay, so they have reportedly signed a multi-year deal with Netflix, and a price tag was not revealed, but the contract is rumored to be valued at more than $100 million.
Well,
What?
they got $100 million for a company that doesn't exist yet.
They moved to LA.
Yeah, I mean this makes sense.
You think? What are they
Yeah,
gonna do?
yeah, this makes a lot of sense.
Why?
Why?
Yeah.
Because basically, if you think about what they're doing here, is they're saying, hey, we're famous, we have a great pulse on culture, and our fame and that pulse on culture will allow us to create amazing things. We'll do an exclusive deal with you, but you give us the money up front, right? Give us $100 million, and we're going to take the $100 million. We're going to create a production company. We're going to create all this great stuff, blah, 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 whatever. From Netflix standpoint, if Harry and Meghan started this and were successful and then went to go sell them the content later, it would be way more expensive.
So you're saying do it up front and
They're basically making a bet that, like, it's like a venture capital investment. You're basically investing in something before it's actually become.
Netflix is making the bet.
Yeah,
Yeah.
they're making a bet that Harry and Meghan will be successful in doing a production company, and therefore let's basically buy exclusivity today at a cheaper price than we would get it later, right? And we don't want to create a bidding war. We don't want to do any of this kind of
Got
stuff.
it.
It's like, look, sure. And now, does it work? Who knows? But that's the logic here, and I think that's fine.
I just I don't know. They left the royals. They claimed they wanted more privacy. Yet here they are exposing themselves on Netflix.
Well, it
I
doesn't
don't
say
know.
it doesn't say necessarily that they're going
Well, that's true.
to
They might make documentaries and stuff.
about other people.
Yeah,
It doesn't
yeah,
mean that they're going to do anything for themselves.
Okay. All right. Ready?
Yeah.
So people felt bad for me, so somebody on YouTube gave me a joke.
All right. What bad joke did they give you?
Okay. Thank you, Chow. Here's a random lame joke for Paulina. Hey. Okay. A mushroom walks into a bar. The bartender says, "Hey, we don't serve your kind here." And the mushroom says, "Why not? I'm a fun guy." Thank you. That was a good one.
Did you even get the joke?
Yeah, like fungus, like fungi. You didn't get the joke.
No, I do get the
Oh.
joke. Fungi. I got it. It just wasn't funny. The first person who sends me a joke that makes me laugh, you'll be my friend forever. All right, guys, that's it for Lunch Money today. Well, Walsh is trying to get rich. The rest of us
Oh,
just
that
trying
was
to
a
get our
good
lunch
one.
money right.
Cha.
Well, you don't salute with your left
Cha.
hand.
Oh. Cha.
And you also don't do like a limp wrist. You're doing
No,
like a...
I'm doing it at a 90-degree angle. I can't get up there, though.
All right, guys, that's it for today. We'll see you guys tomorrow.
Bang, bang. Hope you guys enjoyed this episode of Lunch Money as much as we did.
And don't forget, Lunch Money is now sponsored by BlockFi, so go check them out. There's a link in the description that you can click on. I'm an investor, a user, and a huge fan. What?
You're a bigger fan of BlockFi than you are of me?
BlockFi is my second favorite thing in the world behind Polina. They've got 3 products. They can give you a US dollar loan. You can earn up to 8.6% interest on an interest-bearing account, or you can buy and sell cryptocurrencies on their crypto exchange. I personally use the interest-bearing account. There's not very many places where you'll find up to 8.6% interest on a deposit in an interest-bearing account. Go do your own research. There's risk associated, but 8.6% is pretty compelling. So click on the link in the description. Say thanks to the folks at BlockFi. Subscribe to our channel. Like the video. Annoy Polina in the comments. And we'll see you guys tomorrow.
And be kind to your friends.